So you're looking down the road, thinking about retirement, and really wanting to make smart choices with your savings. You want growth, sure, but also that feeling of security.
Totally understand.
Yeah.
We get it.
Today, we're doing a focused dive into one specific financial tool. The goal, help you quickly understand how it works and, maybe see if it fits into your plans.
Exactly. We're looking at information about the Delaware Life retirement stages. Select fixed index annuity. This comes via Diversified Insurance Brokers, who offer the product. Our mission here is just to break down its key features.
Right. See how they might align with someone's individual financial situation.
Yeah.
Okay, so a fixed index annuity. The basic idea, as we understand it from the materials, is this. It offers the potential for your money to grow, linked to market indices. But, and this is key, with a built-in safety net. It's designed to protect your initial investment from market downturns.
Right. Trying to capture some market upside while limiting that downside risk. That's the balancing act it attempts.
So how does it try to do that? One of the first things mentioned is the flexible premium structure.
Yeah, that means you can apparently put money in a way that suits your current situation.
Yeah.
Not just one big lump sum necessarily. Allows for different saving style.
Okay. And the growth part. It's linked to, well, quite a range of indices. You've got the S&P 500, obviously.
The big one. Yeah.
But also others, like the Goldman Sachs Canopy, that one tracks a specific basket of global stocks, apparently. And the first Trust Capital Strength Barclays 10%. Even something called the Franklin SG Select and an S&P 500 Dynamic Intraday TCA Index.
Right. So offering diversification. Different indices, different potential growth drivers. It's not just tied to one thing.
And for people who find that maybe a bit overwhelming.
Well, they also mention pre-built allocation models, Precision Core and Precision Edge. Seems like these are designed for different risk comfort levels, simplifying the choice.
Got it. Now let's talk about a big one, principal protection. That's a huge comfort factor for many folks.
Absolutely. Knowing your initial savings are shielded from market losses is significant. And they add another layer with something called the Guaranteed Minimum Account Value, or GMAV.
Okay, what's the deal with the GMAV?
Here's a really concrete point. The information says after 5 years, your account is guaranteed to be worth at least 110% of your initial premium.
110%.
Okay. And after 7 years, that guarantee goes up to 115%. And this is regardless of how the market indices actually perform.
Wow. Okay. So that's a guaranteed floor. That provides a real tangible sense of security separate from the index performance.
Exactly. It's a key feature for anyone prioritizing capital preservation.
Yeah.
And then there are different ways this growth, the index link part, can be calculated. They call them crediting methods.
The crediting methods, like what?
Things like point-to-point with a cap growth measured over a period, but limited at the top end. Or participation rates, where you get a certain percentage of the index gain. And performance triggers, where growth might only happen if the index hits a certain mark. There are even more advanced options mentioned, like boost, knockout, volatility controls, different mechanisms.
Okay, so various ways to potentially capture gains depending on market movements and the specific method chosen. Now, what about accessing your money? Flexibility is important.
Definitely. The materials state you can withdraw up to 10% of your account value each year after the first year without surrender charges. So some liquidity there.
10% annually, penalty-free after year one. Okay.
And also, required minimum distributions, RMDs, those withdrawals you usually have to take from retirement accounts later on. They apparently don't apply here.
That's interesting. And what if something unexpected happens? Hardship situations.
Good point. They mentioned waivers for certain situations like needing nursing home care, facing a terminal illness, or even if the S&P 500 cap rate drops below a certain bailout level.
Those waivers could certainly offer peace of mind. Okay, so fast forward. You're in retirement, maybe needing a reliable income. What then?
Right. The annuity offers the option to annuitize. Basically, you convert your accumulated value into a guaranteed income stream.
Like for life.
Yes, options typically include income for your life or for the lives of both you and a spouse, or even just for a specific number of years. It creates predictability.
That predictable income stream is a core retirement goal for many. And what happens when the owner passes away?
The death benefit. Beneficiaries receive the greater of the account value or the surrender value. And importantly, this usually bypasses probate court.
Which can simplify things quite a bit for the family.
Okay.
And quickly, the company itself, Delaware Life.
The materials highlight Delaware Life Insurance Company's history, competitive rates, and a focus on client protection and innovation.
Got it. So wrapping this up, what are the sort of key takeaways here?
Well, to summarize, this specific annuity, the Retirement Stages Select, aims to offer that blend. Potential growth tied to market indices, but with principal protection. You've got the GMAV guarantee, different crediting options, ways to access funds, and options for future guaranteed income, plus that death benefit.
It's really designed for people seeking that balance between market participation and financial security as they plan for or enter retirement.
Exactly.
So the final thought for you listening. How does this balance the potential for growth, coupled with guaranteed protection, align with your personal retirement goals and, just as importantly, your comfort level with risk? Think about which features really resonate. Is it the downside protection, the market link potential, that guaranteed minimum value, or maybe the future income options? That's the key question to mull over for your own situation.